All right, let's really dive deep into this. Bitcoin, the original digital asset, finds itself at a fascinating crossroads right now. Imagine it as this like vast digital ocean, experiencing both these powerful underlying currents pushing it forward and, well, turbulent surface waves creating choppiness.
Yeah.
We're witnessing a genuine tug of war, I think, between short-term market jitters and some truly monumental long-term developments that could really redefine its very nature.
Exactly. And what we're observing isn't, a market in crisis. It's more like one in a state of cautious indecision. It's carefully weighing the immediate technical picture against some incredibly strong fundamental signals that could shape its future for years to come. So our mission for you today is to explore these conflicting forces, everything from the latest market movements and what the charts are really saying,
Right.
to insights from the blockchain itself, the shifting institutional landscape, groundbreaking government adoption, and even some pretty bold long-term projections. We're here to help you understand the full scope of what's truly driving this market right now.
Okay, so let's jump straight into the immediate pulse of the market then. Over the past 24 hours, Bitcoin seems to have settled into this phase of tense consolidation. It's almost stabilizing after what was, let's be honest, a pretty sharp correction. Its price action has been remarkably tight and choppy, really hugging that critical $110,000 level, oscillating mostly between, say, $110,000 and $112,200. It's almost like the market is holding its breath.
Yeah. That anomaly of a market holding its breath is spot on.
Yeah.
This period of sideways movement is definitely a make or break point. I mean, look at the CoinDesk Bitcoin Price Index. It only registered a modest gain, 0.40%, settling at $111,140.50. And while that did technically break a 3-day losing streak, it really just underscores this lack of clear directional conviction. The defense of that $110,000 support level is absolutely crucial for maintaining the broader bullish structure we've been seeing. If it holds, great, it could just be a healthy digestion of recent gains. But if it breaks, well, that signals potential for a deeper move down.
So, okay, we're seeing this tight consolidation around $110,000. Is that like a sturdy foundation being built, or is it more like a precarious perch? What are the technical signals really telling us about the short-term outlook? Are they confirming a deeper bearish trend, or is there maybe some hidden strengths for the bulls here?
Well, the technical charts, they paint a pretty cautious picture for the immediate term. Bitcoin is struggling below $111,900. That was once support, right? Now it's flipped to resistance, making it harder for buyers to push through. We're also seeing it testing its 100-day exponential moving average, the 100-day EMA. That's a key line many traders watch for long-term trends. A sustain close below it would be, frankly, a clear bearish flag. It indicates weakening momentum.
And what about momentum indicators like RSI and MANI-D?
Right. So when we look at general market momentum, indicators like the relative strength index, the RSI, and the MACD, the moving average convergence divergence, they're both showing sellers currently have the upper hand. The RSI is below its neutral 50 level, meaning selling is dominant, though not yet, oversold. And the MDD histogram is below its zero line, which confirms that negative short-term momentum. It sort of suggests the immediate path of least resistance is downwards, even if we're not quite in panic territory yet.
Those technical signals certainly paint a cautious picture. A bit unsettling, honestly, for anyone hoping for an immediate rebound. But are there any technical counterarguments right now? Any, less talked about indicators that might offer a glimmer of bullish hope short term? Or are we really just staring at a bearish bias across the board? It feels like navigating a minefield of levels right now.
You're right to ask about the nuances, yeah. While the immediate picture is cautious, it's not entirely devoid of potential silver linings, though they really require more conviction from the bulls. Looking at these crucial technical levels helps us understand the battleground. We have this crucial support zone right around $110,000 to $112,000. This is like the market's lifeline. It includes that big psychological number, $110,000, the 100-day EMA we just mentioned, and also the 23.6% Fibonacci retracement level. That's a key price point from a popular tool, often acts as support or resistance based on prior moves. Holding this zone, frankly, it's imperative.
Okay, imperative. And what about resistance levels if buyers do manage to step in? Where's the ceiling?
Good question. On the upside, immediate resistance sits between, let's say, $116,000 and $118,000. This is basically where the recent rally tried and failed. It was a previous support zone that has now flipped into a ceiling. Beyond that, major resistance is further up, around $122,600 to $124,500, corresponding to those recent all-time highs. Now on the downside, if that crucial $110,000 support breaks, Well, then we're looking at distant support around $108,000, and then a major support level near $105,000, which lines up with the 38.2% Fibonacci level, another significant potential turning point.
So it's really a complex map of potential floors and ceilings.
Exactly. And the core insight here isn't just about simple bulls versus bears. It's about the market confronting its own recent success. This consolidation feels less like a crisis and more like a high-stakes stress test. Can Bitcoin's long-term conviction absorb this short-term uncertainty? Or will the healthy pullback maybe morph into something more significant? It's a psychological battle playing out right there in the charts. And the true insight lies in whether the market's underlying belief holds stronger than the immediate fear.
Okay, so if the price charts are telling us one story on the surface, what are the hidden currents beneath the market? Let's maybe peel back another layer and look at the on-chain data, because that often reveals deeper, less visible shifts, right? Shifts in the market's underlying composition that mere price action can't show. And what we're seeing is some cooling of on-chain activity, hinting at maybe a great shakeout happening beneath the surface.
That's right.
According to Glassnode data, the monthly average of change-adjusted transfer volume on the Bitcoin network, it's declined by approximately 13%. Dropped from $26.7 billion down to $23.2 billion, which suggests maybe a temporary decrease in the more speculative activity we've seen previously.
Yeah, that cooling is definitely notable, but what really stands out to me, even with this broader cooling, is we've had a significant whale movement.
Right.
One of these large holders, one such wallet recently sent 750 BTC worth about $83 million to the Binance exchange.
Wow, 83 million, okay.
Yeah, and the critical question then becomes, why? What's particularly noteworthy here is that this whale apparently acquired these coins way, way back in 2012, when the price was just $122 per Bitcoin. Can you imagine?
Incredible, $122.
Right. So while their motives are always unknown, I mean, we can only speculate, such large transfers to exchanges are very often interpreted as a potential precursor to selling. This action serves as a stark reminder, really, of the potential for volatility induced by these long-time, large-scale holders, even during periods of market consolidation. Sort of a classic example of old money possibly taking profits, and that can certainly create ripples.
That's a fascinating point about the whale movement, underscores the power of large holders. But beyond individual whales, what are the big institutional players doing?
Let's pivot now to the institutional landscape, because that picture is rapidly evolving and surprisingly complex right now. On one hand, Bitcoin ETFs, those exchange-traded funds making it easier for institutions to invest, they've actually snapped a 6-day outflow streak.
Finally, yeah, recording over $250 million in new net inflows over just the past 2 days, led by Fidelity and BlackRock, which suggests, some institutions are indeed seeing current price levels as a buying opportunity. That feels like a positive sign.
It is a positive sign, but the intriguing aspect here is that this positive signal for Bitcoin is, well, somewhat overshadowed by even stronger demand for Ethereum. Spot Ethereum ETFs logged an impressive $455 million in daily net inflows. They actually surpassed Bitcoin ETFs for the second time this week.
Surpassing Bitcoin.
Yeah, and this dynamic strongly suggests an ongoing capital rotation. You can think of it like a smart money shuffle. Sophisticated investors, having likely established their core Bitcoin positions, are now essentially reallocating their resources, or rotating their capital, you could say. They're moving into other large-cap digital assets like Ethereum, probably seeking higher potential returns, or just broader exposure to the whole digital asset ecosystem. They're broadening their footprint.
Okay, capital rotation. But the institutional story doesn't stop there, does it? We're seeing accelerating corporate adoption that's really scaling up, moving beyond just the early pioneers. KindlyMD, Inc., that's a Nasdaq-listed U.S. company, just announced this really ambitious plan to raise $5 billion for a substantial Bitcoin treasury.
$5 billion, that's serious money.
Right. This could be a significant escalation of the strategy pioneered by companies like MicroStrategy. It shows a much larger commitment from a publicly traded entity. And it's not just the U.S. either. A Japanese firm, Metaplanet, Inc., plans to raise $1.2 billion, with $835 million specifically earmarked for additional Bitcoin purchases.
If we zoom out a bit, these developments, spanning different industries, major economies, they indicate that the corporate adoption thesis isn't just broadening, it's truly maturing. We're moving beyond those early adopters like MicroStrategy to, mainstream Nasdaq-listed companies and established Japanese firms. This isn't just about trying to make a quick buck anymore. It feels like a profound shift in how corporations view Bitcoin. Maybe as a strategic treasury reserve, perhaps a hedge against inflation, definitely a long-term value accumulator. This signals a fundamental, powerful, long-term tailwind that seems far more resilient than just speculative trading.
Okay, now hold on to your hats, everyone, because the most impactful news, arguably, of the last 24 hours comes from the U.S. government itself. This is a landmark move, could have profound long-term implications for the entire blockchain space. The U.S. Commerce Department has announced it will begin publishing official economic data, including the nation's gross domestic product, directly on a blockchain.
The implications here are, well, they're truly immense. This isn't just some technical upgrade, it's a profound shift in trust infrastructure. The key insight, I think, is that once the U.S. government, a global standard setter, right, embeds blockchain into something as critical as GDP reporting, it effectively de-risks and legitimizes the technology for pretty much every other major institution and nation. It moves blockchain from being just the foundation for speculative assets to potentially a foundational layer of global economic truth. This could catalyze adoption far beyond what any private venture could achieve alone. I mean, think about the network effects that could create.
Absolutely. Pushing private sector firms to
Yeah, exactly. Pushing them to adopt similar standards. This is far beyond just crypto as an investment. It's about the underlying technology becoming integrated into how fundamental economic data is managed. Really fundamental stuff.
And on that note of long-term vision, it feels worth cutting through the daily volatility for a moment to mention a comprehensive research report from asset manager Bitwise. They're projecting Bitcoin's price could reach an astounding $1.3 million per coin by 2035, based on a 28.3% compound annual growth rate. Well, that's a bold prediction. That certainly gets your attention.
It is bold, yeah. Bitwise's thesis basically projects institutional investors allocating somewhere between $1 trillion and $5 trillion into Bitcoin over the next decade. And crucially, the report argues that the traditional four-year cycle, which was historically tied to Bitcoin's halving events, well, they're saying it's now dead.
The four-year cycle is dead.
That's their argument. They suggest the new market paradigm will be driven primarily by sustained demand from institutional and corporate adoption, fundamentally shifting how we understand Bitcoin's market cycles. It's a powerful argument for potentially a new era of growth, driven by real-world integration rather than just those internal halving dynamics.
Okay, so bringing it all together then into the broader ecosystem and the forward outlook, we can clearly see this great rotation trend we talked about. Capital flows seem to be increasingly favoring Ethereum, maybe some altcoins, as seen in that ETF performance, but also in on-chain data. Like, for example, Binance Exchange saw these massive stablecoin deposits, over $1.6 billion, right?
Yep.
Coinciding with nearly $1 billion in Ethereum being withdrawn from the platform. And those Ethereum withdrawals often indicate movement into cold storage, basically, offline wallets, more secure for long-term holding, rather than being held on exchanges for active trading.
That really summarizes the current market sentiment quite well. It's truly at a make-or-break point around that $110,000 level. And while some metrics do suggest maybe a late cycle phase, perhaps a potential cooling period, others are actually starting to turn positive, hinting at some underlying strength.
And speaking of positive, there is a potentially bullish development. The Coinbase premium has flipped positive. For those unfamiliar, this is essentially when Bitcoin trades at a slightly higher price on Coinbase, which is a major U.S. exchange compared to other global exchanges. It's often seen as kind of a barometer for U.S.-based institutional buying pressure.
That's right.
And historically, a positive premium can sometimes precede market rebounds. It's almost like the market is playing this high-stakes game of poker, isn't it? Everyone's just waiting to see who blinks first around that $110,000 mark.
That's a great way to put it, yeah. The larger narrative here, I think, is that the market is currently caught between these powerful conflicting signals. You've got short-term technical weakness and that slowing on-chain activity being powerfully counterbalanced by this formidable long-term narrative. A narrative accelerating institutional adoption and unprecedented government legitimization of blockchain technology itself. It's a genuine tug of war, with both sides presenting pretty compelling arguments for what comes next.
So to summarize our deep dive for you today, the market is defined by this tense consolidation, critically testing that $110,000 support level. We've seen a fascinating divergence between the immediate price action, the choppiness, and some truly powerful long-term fundamental tailwinds building beneath the surface, like those strong undercurrents in that digital ocean analogy.
Definitely. And to navigate this environment, there are really three critical factors to monitor closely. First, technical price action. The defense of that $110,000 support zone is, I'd say, the single most important technical factor right now. Its reaction will likely determine the directional bias for the coming weeks. Second, institutional flows. Watch not just the overall direction of ETF capital, but also its distribution. Where's it going? Between Bitcoin, Ethereum, other products, that gauges the strength and breadth of that capital rotation trend. And third, macroeconomic data. Keep a close eye on upcoming U.S. economic data, like those new GDP figures published on the blockchain we mentioned. They will undoubtedly impact Fed policy and the broader risk asset environment.
So we've laid out the immediate choppiness and these monumental long-term shifts. Now the real question is, how do these two powerful forces, short-term uncertainty versus long-term strength, truly interact? What does that mean for the next chapter of Bitcoin's story?
Well, this makes me wonder, and maybe something for you to consider. As blockchain becomes embedded into core government functions and corporations are pivoting with these multi-billion-dollar treasury plans, are we just witnessing merely a healthy correction in a bull market, just a temporary surface ripple, or could this be a profound recalibration of value in the digital economy, something that fundamentally transcends these daily price fluctuations?